Hello, this is Cryptolyze. I hope you are well. This Saturday, 30 September 2023, we meet today to talk crypto, to talk BTC, to talk macro. We are going to talk about the monthly closing. We are going to talk about the quarterly closing. We have a lot of things. We have indications that are being given to us on the clear evolution that America is giving us, whether on regulation, whether on its economy, and you will see that it will not impact. BTC is bad. We will discuss it right away. It's up to you to begin. I remind you that we have a live tomorrow, near October at 18. It's been almost over a year since I last did a live. It's with pleasure that I'm going to see you again. We will have many, many things to see together. So a busy schedule with the possibility of asking lots of questions. And it is with pleasure that I will meet you again. It is tomorrow, 18, and we begin. To summarize this quarter, we had the SEC, we had regulations around crypto, we had ETFs, which were postponed numerous times. We also had very strong figures, which were given whether to stop the increase in rates. But Powell's speech, which is rather harmful, negative, even perhaps too much in quotes. So something that we will perhaps see in the next quarter. But what is interesting to see, it is above all that we have had many, many changes at the structural level. Whether it's oil, we had a quarter that was just impressive, and that's why we're going to open on it. Because inflation, the Fed, all that, we remember that this is really the principle of management and a return of inflation to 2%. There, we are still very far from it because we have an energy increase. If we were ever without this energy increase, we would be more or less in the 2%. And that is the big question. It is oil, which is happening, namely that we have a clear struggle which is being waged at the level of the hegemony of the dollar and which is being waged by the BRICS, which are mainly oil producers, with the various announcements that we were able to have at the level of OPEC, Russia, and Saudi Arabia because it plays a huge role. We have a reduction in production precisely to control the flow of oil, and that is exactly what we are seeing. Here we had a quarter which was very strong, really impulsive. We have almost a candle which was not. And there we are going to have a very long-term vision on the quarterly to project ourselves. We see that we also had this acceleration in 2008, in which we had the very strong breakout with inevitably the crisis which followed. And then we had the establishment of this range, which for me has a lower part at 35 and an upper part, which is in the vicinity of 105 to 107, in which we see very well that we oscillate between these different terminals. And then, well, the lower part can still be discussed. We can very well go and raise it a little bit. Consider that here we do have a contribution at the level of the fence of the candle. Then here a little deviation to retest. Start again, we retest, again, deviation. We reintegrate here, resistance, and then we go back over it. So it would be rather consistent to move into the 42. We will say hop. Here, 42 to 105, it seems completely coherent to me. So there we have this upper limit and this lower limit, and overall oil oscillates between the two, depending on the cycles because we are in quarter. So obviously 4 bars equals 1 year. So we have the temporality, which is really distant. And there we see that we had an acceleration with a very strong upward deviation in which we broke the upper part of this range, but we were immediately reintegrated into it quarterly with precisely the establishment of the war in Ukraine. So here we really have this very strong political announcement in which we had the retracement. And here we are in a period, for those who recognize very well, where it is rather classic. We're going to go and retest to either here make a bearish continuity and go for the bottom of the range, or simply go and make a new deviation and then either accept above to start up again. It really won't be positive, or do a reintegration, which would be a lot more violent of this style. There we are waiting to go higher to retest the range. And it will be interesting to see because we can consider that when we look at the bullish movement that we experienced, the bullish movement, which is this first very strong bullish impulse that we had, which started in this zone there, which gave us this ATH here with the war in Ukraine, we see that the 618 corresponds to the 105. So we already have a call at 105, okay? If we retrace the entire movement. What do we see? We see that the 686 is also in this zone here of retracement arrival. So in fact, in the general idea of having a bearish continuity, because when we look globally, we could say that we have an increase and then we have a bearish continuity because we have highs which are more lower than the previous one. Okay, yes. but nevertheless, for me, we are no longer in a form of ranging, and we are going to stay in this form of ranging because we are in a phase of maturity in terms of oil. We are in a phase where it is becoming more and more expensive to mine oil, to recover oil, and at the same time, we are in a period of massive overinvestment to find something other than fossil fuels in general. So we will have an inflationary trend in terms of oil, but which will also generally be maintained by the rest of the world because we has a vocation to reduce its price because we want to control inflation. We want to have something that allows growth. We know very well that oil equals growth, that the price of oil determines inflation, and that inflation prevents growth. And there we very well have the equation in which it is very complicated to interact and in which the technological part has a huge influence, whether through the appearance of new technologies or through new means of extraction, which make it possible to reduce costs because there is a question of strong structural costs. And there is also a question of politics, which is added with a means of pressure, because we can clearly see that here we have the strategic reserve level of the U.S. purchasing zone, and we know very well that the reserve level has decreased greatly, and therefore currently we find ourselves in a period where the United States will need to reload, and so we risk having a potential retest with a small fuse in this area, which will be bought by the U.S. and then left. So we could very well have something that happens like this with a retest, a little wick, a close here, and then we're going to retest here before we can potentially go back down. There, we will decide whether or not on short-term, being very relative overall to the weekly. If we have a distribution here, we will have a strong signal to say that we will have a bearish continuity and there will be a big salt opportunity to be carried out depending on the tensions, well, obviously geopolitical issues that will be underway. If we ever have a new war that starts, we all think about Taiwan during these periods, but we have something where we will have to monitor oil because oil is going well, be the keyword of inflation, and it will be the keyword of growth. It is oil that generally holds everything together at the level of the different Fed rates and at the level of stocks too. Because if we look, here we are in weekly, okay, but we are going to return to this quarterly period at the level of the SP 500. Very important, we see that here we take a little step back. We see that we have another period of crisis in which we have another bullish acceleration, retracement. We have retested 786, and overall we are in a consolidation phase. Is it a bearish continuation by saying that we have a pattern that will be of this style to go for something that is lower, which is this scenario that we often hear very present in the notion of hard landing, the collapse of the USA. I think that with what is happening on artificial intelligence technology, which has taken precedence, which made it possible to have this acceleration in the century, that we are very far from seeing the United States really collapse, okay? Yes, the dollar will decrease. We will discuss it in a few moments. But for me, we are still relatively far away. And we are more in a process here of consolidation and construction. And it's seen a little better if we start to go down in the time frames, switching to monthly. In monthly terms, we see that we have had this phase of bearish acceleration, this phase of very, very hard work in this zone of 4,157. And we see that we are going to retest what is classic, in which we have cases of bearishness, accumulation, bullish acceleration, therefore rupture of the period of ranging and accumulation that we had here of lateralization. And we are going to retest and then start to rise again. And that is exactly what we are seeing. We see it even better if we decrease in weekly, where this time we have two phases. We have the first phase with this top, which has been retested by this candle, which was bought back, which is the objective of bearish continuity, moreover, that we have here, which is the objective of 1. We could have had a 1.1 extension, and there we will have to see is what we are going to look for is 1.618, which really corresponds to the very strong line of 4,100, which is really the structural zone of lateralization, in which we have a lot of liquidity and work here. So for me, we are going to talk about two things, hard landing, soft landing. So that's very important, hard landing, soft landing. These are two things that will fight for a certain time. I think we won't have an answer for at least a year overall, but the two will work out. Defend, and above all, it risks playing a huge role because we have a U.S. presidential election in 2024, which will happen with potentially a move to the Republicans behind it. So we keep that in mind. We will use it later in thinking about BTC, and there we will see the two scenarios. For me, the soft landing will be a landing in these two terminals here, which are orange. It would be something which would be decided like this, with potentially here an accumulation, a difficulty, a rupture, a retest, and an acceleration. There we will really have a pattern of saying that we are in a form of soft landing. There are several elements, we will look at them later, which will be able to determine whether or not we are in soft landing. If we are not, clearly we are going to break the 4,100 here. The break of the 4,100 for me is the validation of a hard landing in which we will enter a recession, which risks being relatively strong, perhaps very short but very strong, with potentially here a retest of the lot, or perhaps even break it, therefore a return to the 3,500, and which risks doing very bad and very bad to the economy. Very bad perhaps also to BTC, although we know that we have a decorrelation which is very strong. At the moment, so it will perhaps be a return to the 20,000, but we must understand that there we will be in a dynamic which will be totally different, and we will think differently because we will have a leak of equity, which risks being very strong with potentially real and very strong breaks in the American banking system. We will discuss it when we get there. For me, I am still in my soft landing dynamic. I am still in this dynamic here of a lateralization between 4,100 and 4,200, and there it will potentially be, if we have a very good lateralization, a very good opportunity to be able to accumulate elements. So we will ask ourselves the question, what will determine our landing, soft landing? Clearly, there are two indicators that will be taken into account. So yes, we will see all the figures that will arrive, but it will not really be that. It will be here, the establishment of the unemployment rate. We see that we have nevertheless had a pattern for several months, which is in the process of turning around. We recognize that very, very well. Of classic technical analysis, where we see that we are positioning a double lot, in which we have here a maintenance of the low of the resistance. We make a break-off bullish structure. Therefore, we break the previous high. We will retest. We repeat the next one. So there we have a bullish dynamic, which is in the process of being put in place. Therefore, an unemployment rate in which we will expect an upward acceleration, after which we must see whether we is going to be in a retest before. So a retest potentially. Here towards the 3.7 or even the 3.6 to then leave something which would do hop like that here, retest and then acceleration, hop, retest, acceleration there. We will really have a very strong bullish signal, and this is not a good sign. It means that we have a very strong acceleration, therefore a recession which is setting in place. Overall, if we look at what happened historically, when we look in particular at the years 2001 and then which followed 2007, we see very clearly that during the break, we really have a very strong acceleration. And when we start to go above 5%, it's a very bad sign. That's where we really have hard learning taking place, which will perhaps last quite a long time. There, the notion we don't have any temporality, it can last 8 months, and then we start again in which we have a bearish breakout, so we're going to suffer very badly. But that also means that we will have the capacity to be able to buy. So for me, we have a first sign, which is here, which will have to follow this sign of having a reversal with an RSI and a momentum, which is in the process of rising. Well, there, we still have information to say that we are heading towards it. In terms of temporality, it's going to be here. There, it's already been 3 months where we have seen an upward acceleration in the differential between U.S. bounds. This means that currently, when we are in negative territory, it is more interesting to hold 2-year American Treasury bonds compared to 10 years, something which is totally stupid because risk management at 10 years is a lot more complicated, so we should be paid a lot more. Here, this is not the case, and we see that we are in the process of inverting. That is to say that we are in the process of redirecting ourselves towards the zeros. And we know very well historically that when we reach zero, that's the moment when we have the answer. Are we in a recession or not? And there we see that we have a very strong acceleration phase, and we will see if this acceleration is taking place. But we could say to ourselves that first quarter 2024, we could very well have the answer and the implementation. Place of a recession or not use. For me, we are still in this soft landing dynamic because it has not changed. When we look at the dollar here, we see that we are in something rather classic. We did a retest here. We are still in highs, which are lower and lower. We know that we have an impact of the dollar, which will continue to fall because we have a form of de-dollarization of the world market. So we have an interest which is relatively low. Currently, it is interesting to hold the dollar because there is the American debt, but that will decrease when we put in place the pivot. It is even very likely to retest a high part here in these zones of the 110 before making a bearish continuation. So we are no longer in a form of retest. We are just going to zoom in a little bit. You will see that there we have retested the game well. We have a rebound. So we will retest this part before making a bearish continuation, which would be completely consistent. And if we look at Fibonacci plus, I think it should be pretty much consistent, 610, 786. So we should have a candle close that should be done here to then have a bearish continuity or even a wick, which is done there, the 618 close, and then a bearish continuity to rework the lower part, because it is also very probable that we put in place, like on oil, a range, because we still have elements which are relatively strong. We can clearly see that we have this zone of resistance here, which is very present, this upper part, which could also be higher, or even in this zone here. So we could very well rework in a zone between 88 and 110 for a certain time, until we have the implementation of de-dollarization and everything that is put in place. For me, the dollar must be put into perspective. It is something which has relatively little impact on BTC now. Clearly, it is represented on your USD at more than 50%. So the impact on BTC is relatively weak, but it will have an impact on the injection of capital and therefore behind the release of yielding and therefore the reduction in interest rates. And therefore the remuneration of the bonds will lead to a transfer of liquidity. As I have already explained in several videos, a transfer of liquidity towards stocks. And that is rather what we are going to look for. And the drop in the dollar will be represented behind the drop in the rates of return on American bonds. And therefore necessarily an impact on, for me, the SPF 500. So the general idea that I have would be a bullish continuity and a bullish maintenance until we find ourselves in an SPF 500, which is in the process of retracing in a soft landing, a bearish transfer at the level of the DXY to behind. Have here something which will be in this zone to start rising again, and therefore at this moment, we will have the transfer of liquidity, which will take place between the two, and this is where people will go to seek yield. This is where the people are going to transfer their liquidity. The return on stocks, yes. The return on risky assets, yes. And here we are going to talk a little bit about BTC. What is the impact of BTC compared to everything that I have explained to you? Clearly, what we learned this quarter, and this is very important with this monthly close in particular, is that we have a very strong form of resilience at the level of BTC, at the level of the macro economy. I have explained this to you for some time now, that I saw it little by little already in the reduction, in the correlation between the reduction of one and the other. So we are really between the two. And for me, we are in this approach where behind there is a real disinterest in BTC by institutional actors. So we did have an external liquidity transfer that took place. So what we are going to expect will be an internal liquidity transfer. So the people who are present are people who are there mainly for crypto, for exposure, but who are not there to be a risk firm. We are really in two separate things. So here we have rather good liquidity, which means that we managed to maintain important levels, like the 25,200, which is the level of the AR here, but especially since we managed to keep the real falls at the level of the SPF 500. And this is where my notion of reload zone I am currently thinking about. Is it still holding up? What would cause a breakout that would allow us to reload into 20,000, 23,000? Wouldn't we just maintain this area here, or even potentially do a little bit, retest the 23,000 and then go back up there, or actually maintain a ranging zone for a period of time? What exactly would cause this break? Would the announcement of a recession be strong enough? Would an SPF 500 to 4,100 take BTC to 20,000? Historically, I would have said yes. There, the more we advance in time, the more I say no to myself. So that means that we would then have a hard landing to train us at 20,000. Okay, what would happen to cause us to retest the low, really low part of the 16,000? An endogenous element. And this is where, for me, we will really have to monitor the endogenous elements. This is where we will have an answer. Are we going to retest the 20,000 or the 18,000? It is not. Plus the macro. The macro is interesting to see in general because we have a transfer of liquidity. This is what will, in fact, give us a return of liquidity on risky assets. And so it is there where it will give us the go, where we will have an injection of liquidity, but more on the bearish breakout, the intention. Bullish. The bearish breakout, we will have to look for it in endogenous elements. So implied Binance, implied an FTX biz or something which can be relatively strong, like a very strong ban, or why not a very, very strong legal action from the dry. We had the speeches from the SEC. We have Gary Gensler, who clearly announced that he had everyone in his sights. He is postponing all the ETFs. I think that it is more on this side that we will have to aim if we ever want a bearish fund, not necessarily on the macro. And that's where it's going to be really interesting and that we're going to have to think about. And precisely tomorrow, I'm going to offer you, in addition to the live A video at 8:30, which will be really very important, where I'm going to talk about the notion of mining in BTC and the impact that it will have on the next bull run, with in particular the last release which took place on Bitman, therefore, who is the producer of ASIC, therefore, of machines, which is used to make BTC mining where it is. Really important to understand the impact that this will have, and you will see that we have answers on the minimum price of BTC for the survival of the ecosystem. We have answers on the real price so that companies continue to invest in BTC mining, and that's tomorrow, 8:30. And then we'll see you at 18. And yes, it's a big Sunday, 18 for the live. Don't forget it, and I'll see you tomorrow.